This is everything you need to be looking out for as a trader heading into April 20th, 2025. I'm going to break down the technicals, the tariffs, as well as the individual earnings names that are going to be in play that might influence your trading in the market. We're going to hop over first and start with the economic calendar, which is the start of my weekly process. As you can see right here over on the economic calendar, we have no news on Monday for the week of April 20th. We have no news on Monday. We have a little bit of news on Tuesday, but really it's just going to be PMI, unemployment claims, and you get a couple news drivers such as consumer sentiment, which even though it's an orange folder, stuff like this can sometimes have a larger impact on the market than you would expect. Looking at the individual earnings names, you want to go ahead and you can check out TradingView. You can see this here. I will go ahead and look at Google, Tesla, Procter & Gamble, then you AbbVie. These are pretty much the main ones based on market cap for this upcoming week of April 20th. We want to basically see how are these things looking from a technical side, and perhaps they're going to have some influence on the market. Google just did have some news regarding antitrust regulations and things of that nature, and they did not win that case. So that can be something that weighs on the market as well. We're going to go ahead and from there, we want to just hop right onto TradingView. So we know a couple things are going to be in play, but first and foremost, let's go through the technical levels for the index. Trading the index is, well, put it this way, it's a very simple way to make money every single day. I enjoy trading the index over options. This is something that I've made the switch to over the past couple of years, and it's just because you could generate consistent returns on a daily basis. What we first need to do, however, is start to break down some of these technical levels. Any index trader is going to want to look at a few different things. Number one, you can go ahead and look at trend, understand, are we above or below major points of liquidity? You see something like this as a sweep. When you run into a significant level, such as one of these, you'll see the tendency for the market to want to bounce. Now, whether or not this is short-lived or it actually does see the full upside is going to be based on how we develop this week. But largely, you want to see, are we reacting to these areas, because we can start to position alongside that trend. You can also accomplish the same type of analysis using something as simple as like a daily moving average, right? You can see that there's going to be correlations between major moving averages, and for the daily chart, we're honestly below quite a bit of them, as you can see right here. The question this week will be whether or not we reclaim this 5,600, the top of this range, and that 21-day moving average. But back to the stuff that I like to focus on, I'm going to break this down in a very simple and easy to digest way. I'm simply put, I'm going to be looking at prior week high, prior week low. So these two levels right here, we'll go ahead and make orange, and we'll make them a little bit smaller. Those are really important. If we do happen to break above prior week high, then we can start to look into some of this area, or even as far as up here, as far as that, right? That could be like our reach in terms of like a stretch target. And then if we do continue to the downside, this is going to be that major point of liquidity that we're going to be targeting. However, we get more granular than just the weekly chart. When we're looking at ES, we want to see whether or not this daily inside bar is going to break and which side will it break towards. If we do not gap, we could potentially look to trade this short into this level and then reassess. But if we do gap, perhaps we trade here and then look for the rejection, or more than likely we'll look to trade in the direction that the daily inside bar is breaking. That is a typical play for pretty much any trader of any strategy. Look for this inside bar to break to then target something such as this 5,500 that we've been eyeing for quite some time. We did see a little bit of consolidation early last week. The shortened week with holiday led to this inside day on Thursday. Now, we did expect perhaps this to run last week. That's not necessarily out of the question. We can definitely see some upside. I was able to capture the short on NQ for Thursday. However, I will look to trade the break of this inside bar, and then from there we can look to potentially position for a run into this gap right here between these two daily candlesticks. So to put it again, pretty simple. We want to look for, number one, a break of this inside candle. If we can break this inside bar, we could potentially trade up to 5,500. So this would be essentially trade one right here between these two levels, break of the inside bar, and you target this 5,500, 5,550 up here as well. You have this little gap. So essentially look for the directional break on sometime early in the week. After that, then we can start to assess how are we building market structure? Have we seen any meaningful displacement? So ideally, we're going to see some sort of break of this, and then whether or not it can sustain and then see the higher lows and higher highs, or if it, vice versa, and then the target's down here. So I want you to know that this is going to be a very simple structure to work with. You do not need a lot of levels. Where right now we've held this prior intra-week support that we had, and we can break this down on an hourly and show you there as well. We've held this previous point of resistance, now turned into support. That's our pivot. So if we can kind of break above this little inside daily candle right here, we could potentially see that start to lift off in the near term. That's what I like from a market structure perspective. If you want to go ahead and apply some other tools to this, you can as well. You see that this is in fact the point of control when you look at it in the near term. Let's see. When you look at it from a far enough distance, you do see that it is up here, which is a likely area for us to draw, but you do see that this is a high volume node. You have some right here and right here as well. Whether or not this is a key component of your analysis is really just up to you. It's not something that I'm using consistently these days, but you do see in the near term, this is the point of control. So it is consolidating. There is value here, and it could potentially start to look to break out of the value. This is a system volume profile, something I'm very familiar with. It's just I don't use it too often anymore. I prefer to stick to the candlesticks. A little bit easier for me, but I do like to make the relation because maybe something leans a little more towards what you prefer. And if I can help share my experience with that, I'm going to go ahead and do so. So that's what we're looking at for ES. Go ahead, take a screenshot of these levels. Pretty simple inside day break. Look for a directional move, and then you can target some upper point of liquidity or, again, the downside levels. And if you need internal targets for this, you're going to go ahead and just draw them from this hourly. So just take note of these levels, take a screenshot. And if these levels are helping you out, go ahead and leave a like as well. But we're going to continue to move forward. We're going to hop over to NQ next. And we're going to make this video very short and sweet because NQ is going to be somewhat similar, right? We do have that same inside bar formation. However, the level's a little bit weaker. We have this up here and we have this down here as well, right? Like we have all these levels near us. You can mark this one out as well. You can label these as you like, but essentially I'm going to be looking for that inside bar to break. Let's just say right here, looking for this range to break to then target this side. Or if this range to break to the downside, we'll target something within this range. We could even go like, that's even a pretty basic base hit level. You have this as well. So you can just see all the price levels are going to correspond on this axis when I'm highlighting them. So like down to the 867, basically if you break 1800, look to trade basically 17 or 18K to 17K. That'd be a decent range for the next day or two, right? If you break to the downside. I think NQ is a little bit weaker based on the daily close. However, it doesn't mean that we can't break to the upside. That is an inside bar. I do like this. I think it's pretty clean up here. If we look at the hourly again, you can see, yeah, it's all relatively equal highs. So it's very fair that for us to assume that we could draw up here as well. So for NQ, those are my levels. I hope you can see these as I draw them out pretty clearly. ATR, again, this is a measure of volatility for the index. So you can see that it's substantially higher right now. So the ranges are higher, meaning the size is down, which means we're still stuck trading micros, which is all right for the time being, but we do want to look to position a little heavier once this volatility can get folded in half. We'll quickly glance at YM. Well, don't plan on trading YM. YM had some repricing outside of what the normal indices did based on some sort of downgrade or something of that nature. There was some news related to YM, and that's why you see that decline in price on this daily candle. Moving forward past YM, we'll go ahead and look at crude. Quick bounce right here, right? We'll just look at these very broadly. You can see that crude's at the bottom of a range, right? I'm not a crude trader. However, if you are a crude trader, you would look to trade back at least to equilibrium of this range right here. You go ahead and mark this out for you really quick. It's always good to build familiarity with other markets, especially commodities, because they might come into play. So you can see something like this. If we go ahead and extend it right, something like that, some sort of equilibrium for this dealing range. You look to maybe target that inside bar, reversal bar. Then you have this gap. Look to form a bottom wick, then trade higher. That would be a decent trade for the week for crude. Keep moving. Gold, all-time highs, crazy. Gold expects some sort of retracement, especially if equities start to rally. Gold should start to subside because this is a hedge for just risk assets in general. It's technically seen as a safe haven, if you will, a store of value, everything that Bitcoin says it's supposed to be, right? But going past that, we can see silver, once again, big sustained bounce, and then likely do we retrace back into this range if we start to see more risk on scenarios with equities? Good question. So keep an eye on these things. VIX, we want to see continue to fold. This is a volatility index. If this can keep going lower, then we can assume that it's going to be safer for upside bets on the index. Go ahead, take a quick look at dollar. Want to see dollar start to, dollar's just declining. declining. Typically, these are inverse correlates with risk assets such as the index and dollar. Dollar is supposed to be declining if the index is going up, then the other way around. This has been falling while the index has been falling as well. So it'll be interesting to see if we can break that back to normal. So looking at a few of the names that have earnings coming up, we can look at Tesla. And again, we've been talking about this daily setup on Tesla for a minute. It's just a break of this range. So if we get a gap out of this range, there's a potential for an earnings play there or a gap below, right? You're expecting some sort of directional move out of here, and whether or not that gap can gap and go, or it's going to gap and trade the counter gap setup. So those are two scenarios that I would see for Tesla coming up pretty soon for earnings. This is going to impact the market, obviously. We can also look at some of the other big board names. You have Apple, just still kind of in the same daily setup. We did get the gap, and then we just failed the gap. That was the gap up on the news, and it just failed it. So whether or not this is forming a higher low right here would be good for the index to trade higher. But other than that, we look at Google real quick, and we'll wrap this up really quick. Google's still just declining, hasn't been all that great since the last earnings. So yeah, hopefully you guys learned something in this video. I just want to share a couple of levels with you. I'm going to be trading all of this stuff this week on my Top One Futures account. If you're not over trading with Top One Futures, you can see up 3,300 on the account this month so far. Just stacking the green days, a couple red days here and there. But the idea is you get 150K risk. You get a 150K account and you can risk up to $6,000 in drawdown for $400. So if you're not trading with a prop firm, definitely check out Top One Futures. Use my code DTA. It will save you 50%. This is what I trade with. I keep my risk about $1,200-$1,500 a day. And from there, I'm able to make, $500-$600, stack those up, and you look to build a pretty solid payout in a month. So hope you learned something in this video. Just want to share a couple things with you. Those will be the levels I'll be looking at all week. If you're not in the Discord already, I will go ahead and share those in the Discord as well. So go ahead and join. You'll get all that analysis tomorrow night, or when you're watching this, it'll be tonight. So take care. We'll talk soon. And yeah, that's it.